Good morning, good morning, good morning. Welcome back, everyone. We are starting off a new week and a new video, starting with the S&P E-mini futures SPY, due to the fact that some people requested a few tickers. So ES1, SPY, and Dow Jones are the ones I'm going to do today. Here is the weekly on SPY. You're basically in price discovery, I believe. Yeah, this is all-time high. We're in price discovery. Can't really complain about anything. Yes, we're getting a little up there. You have bearish divergence actually starting. I would not look into that until the month is actually over. On the weekly time frame, you are basically possibly going to get a little bit of a pullback this week due to the fact that you had a hard rejection last week after hitting the high. This week we have to see the follow through. Going on daily, you can see that as long as we are above 51.34, there's no real downside to consider. You're actually sitting on support above the point 0.5. Everything is looking good for upside continuation. I would not stress of downside until you lose 51.34 and then really 50.80 until you really have to worry about downside. And then if I turn on all the fibs I drew out, you can understand why you're getting a little bit of resistance here. Go to a weekly. So what happened over here is you have an expanding wedge, uh, consolidation. If you can see it like this, it's an expanding wedge. And expanding wedges go like this, ding, 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 ding. It's gonna probably come back down here. So you'll find some kind of consolidation here before we continue up or down or etc. Finding a look, and it's so funny that you find it right at the, this right here would be like where you look for that short opportunity or take profit consider conditions, etc., etc., etc. Don't worry about all that for long-term people. I mean, this is why you're getting resistance. There's probably people taking profit. This little doodle I drew, I'm going to remove that. That's probably the kind of price action we should be expecting in the consolidation. That out of there. Okay, so now this is what we're looking at. Uh, if you got this resistance here at 52.75, like I said, you don't want to lose under 51.30, I said, on a higher time frame. You can just make that 50-50, okay, on daily. So today we need to close above 50-50. If you close underneath that, then we have the risk of coming and testing into that 4900 area to 4800, and that's still not a bad thing. It's only when you actually start closing underneath 4900 that we have a risk of a deeper retrace. But still, as long as you can go sideways here, more than likely you're going to consolidate and then go tap into the targets of 52 to 54. Okay. It just depends on us being able to break into this previous order block. And even if you do test into this order block, is it support? Is it resistance? That's kind of what the dip to the downside is going to confirm. And basically, that dip is also a buying opportunity for all the people who missed out on the upside move. So you can see how the doodles all line up now, right? So if this thing wants to come down and test into this area, it's still a bullish retest of support before continuation breakout for higher. So you should not be too concerned if this actually does get a slap. And it could even come all the way down to 40.70s, okay? And it still would be considered healthy for upside continuation. Something like this that consolidated can happen here, and I'm giving you the best case scenario of a shallow bounce on support and continuation. It's when you start closing underneath the yellow line that this becomes dangerous. Okay, this was a fast move down, and somebody stepped up to buy. Okay, if they don't step up to buy here, we're gonna get a deeper retrace as well. So it all depends on the conviction of the market. If people are on risk on mentality and whatnot. If everything is peachy keen, I'm sure there's a bunch of people trying to buy this dip because, like I said, we're in an expanding wedge, right? The next uh, uh, low would be considered a higher low on an uptrend fashion, maybe near around here, like 46.50 ish. at the lowest that we want to see, and then that can just get picked right back up and run it up. Basically, shake out all the over leveraged people and people who are longing the top. They're just gonna get squeezed out because they're buying the top, selling the bottom, and the cycle repeats in the retail world. So that's what I'm looking at with ES. Let's go to the next asset. This is Spider. Okay, so this is SPY. Similar thing, you're getting a little bit of resistance this week at the beginning because we've been going up nonstop for a few weeks. So a little bit of resistance here makes sense. I've already taken a liberty to draw the fibs. We were actually looking to accumulate on this. So if you go back to the videos when I made them, we were looking at this diamond exchange as the pivot for the rise back up. And this was October of last year when the bull run started. So similar thing happened this bull run, October, I think. If you look over here on the bottom, here, see? This bottom was in October, and this bottom over here was in October. I don't know what the significance of that is. You can connect the dots yourself. uh, okay, so we're at resistance. You are actually above where we are trying to consolidate on ES. So that's actually good. I would be looking for this consolidation to be like over here as the support. I wouldn't want to lose under 450 because of the fact that then the risk of a deeper retrace comes back. So I don't want to see us go under 450. And if we do get this push down, it's best not to even lose 490. Okay. If we can do a quick consolidation here above 490 and ride it up, cool. If it comes back into the support of where we broke out of, aka 178-ish to 150, you can use that as the buying opportunity and scalp that long back up. This is going to be a deeper retrace if that's going to happen, but it's still a bullish bounce due to the fact that until we really get closes underneath 450 on SPY, I wouldn't be concerned of downside. Right now, your consolidation can, come all the way to 478, 480, yeah, 480-ish, and it's a buying opportunity in my book. 480 to 492 is now support. This red dash line on top of that is even the most local support, but the fib support is like, long term. This EMA move with people's emotions on depending on if someone's impulse buying or like distributing pretty hard with like market selling. That's what the EMA is for. E is for emotion. It's actually for exponential, but I just say emotion. And then the fibs are there. So these are like targets that the bots are trying to hit. So you understand this little target at 524, you were pretty damn close to it after actually hitting huge resistance. When the people took this long here, they just took profit between 482, 492. This overshoot is basically a short squeeze and like exuberant situation where if you reject from here, if that doji sets today this week, the next week when you open, you're going to be flushing down to the downside. That makes sense because we're near overbought condition. Okay, we really need buyers to step up at this level, at this price, for continuation up. If buyers get exhausted and they slow down and sellers are still there, well, the pressure to the downside will take over. It's as simple as that. Until we lose 4080, I'm not even looking for 4050. Until we lose 498. I mean, between 490 and 500 is like the wiggle area, that $10 area. But underneath 490 is where you really need to be defensive. Between 490 and 480, that $10 wiggle room is like that's where I would be managing my risk. It doesn't matter how small my position is or how large. I could be trading $100. I could be trading $10 billion. Between 480 and 490 is my first warning, and between 480 and 450 is like my final warning. And at that point, my trade has to be either closed or I need to figure out what my DCA strategy is, and et cetera, et cetera, et cetera. So yeah, that asset is now done. Let's go to the next one. and this is Dow Jones. Okay, so this one is actually the one that you guys should probably pay attention to more than the others. This one is actually doing the test of support right now. You are tapping into that red line, and if you close underneath that red line here at 38,500, the risk of us dropping to 37 is there. Okay, I'm gonna turn on the EMAs. Sorry, my fibs. This is where we were trying to accumulate this. So just ignore all this stuff and delete off of this. Delete these doodles. Delete this doodle. Now you can see that we are basically at the TP of this area. This is where I expected resistance. And the only asset that we looked at today that's above this level is the one that we looked at right before this. I already forgot it. The SPY, I think? Yeah, SPY. The SPY overshot and is looking for support. And Dow is basically at the resistance of EP or potential short area. So what we need to see is Dow going to be the thing that drives the market down by actually losing support with a daily close underneath 38.5? And that could happen today. And if that happens, then we need to go look at 37.2 and see where the support is at over there or not. If there's no support there, then it can go flush down and actually go to 35 because it's coming off of overbought conditions. So where we find support is very important. Right now, I don't think we're going to get too much lower than 37.3. But if that happens, you got to be aware that that's where the order block is. Um, make this a little bit bigger so you guys understand for doodle time. The way I see it is your last level of support is right here. So, so we're pretty stacked on levels. Uh, if this does lose this 38.5 and we start closing the daily underneath it, then this whole week I'll be looking for it around 37.2. If we can hold this week above 37.2, then next week we can look for a dead cat bounce into 38 and 38.5 again and see if we can claim it to 39 and whatnot. If we get rejected the next time we get to that level, then the dead cat bounces in and it's going to be a deeper retrace. And it's going to be something like this from there. You're going to have to wait for the consolidation to show you where the support is. So it's like for the doodle time, get my colors. So say we get this little, you know, distribution top here, rounding top. Well, the rounding top is going to make a little triangle. Where's the triangle's bottom is what we need to figure out. Is it going to be here on support at 38.2? And we basically make a base here and then break out? Huh? Or is it going to go a deeper retrace where everyone here is going to get flushed and then we go all the way to like 35 or so, do a grind out over here, put in a rounding bottom accumulation, inverse head and shoulder, whatever you retail people want to call it, and then we do a dead cat bounce into this 35, come back out, find some support, consolidate in a little triangle fashion, and then break out from here in a higher low double bottom, inverse head and shoulder formation. And it's going to be a little bit longer. Here's your left shoulder, head, right shoulder. I know the doodle looks like crap, but hey, uh, it's a little laggy on my computer. So, in a rounding fashion like this, and then you ride it up. That's a possibility as well. I know this doodle is red, orange, orange as like a warning, like, hey, this is a possible price action. White is where we want neutrality. Red is the risk of the downward grab. This one over here, this breakout from here is what we can potentially hope as the bottom. the first like grind of the bottom. If this bottom doesn't occur, then the orange path comes out, and we have to find the bottom down and support. And as time plays out, you if you look left, you have some support over here at around 37, and then you have some support over here at around 35.6. And that's basically, if you look here, 37.2, and if you look over here, 30, 35.5, 35.6. So I don't need to really think too hard. The EMAs are telling me exactly where the point of interest is. I just did all this doodle and all this explanation bullshit so you can understand that, hey, there's multiple freaking ways to come to the exact same number. All the hocus pocus shit that people be telling you is just stupid. Just calmly analyze your asset the way, like you assume. Like, here's a volume profile. Why I'm putting a volume profile is so that that also will confirm where's the value area high. Give me my value area high, and then you can see that, hey, point of control, value area high. Those are two other levels of support you can use as this thing wants to break down if it wants to.